What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about one of my favorite stocks in the stock market right now, and that is Google or Alphabet. And Google has gone through some controversy over the last month as they have laid off over 10,000 of their employees. And this is bound to have an effect on their earnings. So they announce earnings next week. So we are going to take a look at those earnings and where they could potentially come in at. And then we're going to go even deeper. We're going to take a look at their 2023 earnings and where analysts are projecting them to come in at for their 2023 earnings. And then at the very end of this video, we will actually take those projections and come up with a potential price target for where Google could be headed over the next year or so. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at Google's chart. So we can see here today, the stock was up 1.9%, and that is fairly in line with the rest of the tech industry. Basically, depending on how much a stock was beaten down, that is kind of how much they are reacting to the upside. So we see something similar, Microsoft not beaten down very much. It's only up 0.1%. Tesla beaten down in a very massive way. It's up 11%. And then Meta Platforms or Facebook, it's up only 3%. And it was another one that was beaten down in a fairly significant way. Google, was not down in a very massive way. It was down maybe around 35, I think, to 40% at one point in time. So, it's only had a small reaction to, a lot of the positivity in the market. And if we go to the last 5 days, we can see it's up 1.5%. And over the last month, that's where things get interesting. This is, taking into account that Google has basically announced those layoffs and the market has reacted in a very positive way to that announcement, right? They're expecting that this is going to reduce their workforce, reduce their expenses, and overall help the earnings of Google. However, in the short term, I think that Google's earnings are going to be hit in a fairly significant way over this next quarter. There's a couple reasons for that. One being that the layoffs, just took place. The second being that there were severance packages that were offered to a number of employees, to a lot of the employees, and that could also hit some of their numbers. So we could actually see Google have a very big miss here in the current quarter. It just depends how things line up because it will either hit this quarter or potentially next quarter. So it's going to be very interesting to see, how those numbers come in. But we can also see, and what is very interesting is over the last 4 quarters, they have actually missed analyst expectations 3 out of the last 4. And out of the last 3, they have missed every time analyst expectations. So this quarter, I'm kind of expecting that to be more of the same. And that is probably what helped fuel a lot of these layoffs, right? They were probably looking at the numbers, seeing that they were going to come in below where analysts were expecting them to come in again for the 4th time in a row, and basically said, we need to make some change to reduce our expenses. There are a few interesting things that are going on here when we take a look at analyst expectations for EPS. But I want to start by just drawing your attention to the expectations around this current quarter. So analysts are expecting $1.17 of earnings for this quarter, with a high estimate of $1.34 and a low estimate of 99 cents. What's interesting though is when you look out a year from now, so December of 2023, we can see that there is a consensus of $1.46 with a high estimate of $1.78 and a low estimate of $1.25. So basically what this is saying, what analysts are saying, is they're expecting Google to grow its earnings over the next year. They're expecting it to get into a lot healthier position in terms of its EPS. Things get very interesting when you look at these fiscal year projections. So here for the current fiscal year, we had a consensus of $4.68 with a high EPS estimate of $4.84 and a low estimate of $4.50. But when you go to 2023, things get interesting because the consensus is $5.05 with a high of $5.55 and a low estimate of $4.30. So basically what this is telling us is analysts are looking at Google and saying, either Google is going to get back to growth or they're going to end up in a worse position than they are in this year, because we can see that their low EPS estimate is lower than actually the low for this year. And also what's very interesting is when you look at this number and then also look at the next 4 quarters and just add up these 4 numbers, this $0.04, this $0.19, $0.18, and $0.25, all 4 of those added together gets to a number that's higher than $4.30. So basically analysts are, kind of contradicting themselves because they have higher growth actually down here in their low EPS numbers than their, current estimate for the fiscal year of 2023. So very interesting there. And then also what's interesting is when we look at this split. So there are 2 people who have revised up their numbers for 2023, and there are 3 people who have actually revised down their numbers for Google for 2023. So again, that's very interesting because often what you'll get is you'll either get everyone revising up or everyone revising down. But here with Google's case, we can see that there's a fairly even split here. It's a little bit sad to say, but I think for Google to achieve some of those higher EPS targets, I think they need to continue with some of their job cuts. So we can see that over the last month, Google cut around 12,000 jobs, and that makes up around 6% of their global workforce. But if we look at over the last few years, we can see that, since 2018, they have actually increased their workforce by over 50%. So in 2018, they were sitting just under 99,000 employees. And then in 2021, they were sitting at 156,000 employees. Over 2022, they basically froze that amount, kind of stayed steady. And then we see in 2023, these early months, that they've actually decided to cut some of their employees. And I think that trend kind of needs to continue. Just reduce the job force a little bit, make some of the investors happy, and also reduce your expenses and help your EPS in a fairly significant way. I want to end off the video by taking a look at Google price targets. So what we can see here is the current price of Google is sitting at $99.37. And then over here in green, we have the analyst expectation. So analysts, again, for the median expectation was $5.05. The low expectation was $4.30. And then the high expectation was $5.55. And then based off that and the current price, we can come up with a PE ratio for all these numbers. So we have 19.68 for the median, we have 23.11 for the low expectation, and then 17.9 for the high expectation. And we will start by taking a look at the low expectation. So we've put the low expectation PE ratio in here of 23.11. And then remember, what we are doing here is we are putting in potential PE ratio. So basically we're saying Google should be valued somewhere between a 20 and 25 PE ratio. That's a fair valuation. We've seen Google trade even higher than that. I think a 25 to a 30 is also a fair valuation for Google and how it's kind of trended in the past. But honestly, where I want to buy at is I want to buy, where there's some margin of safety. So what we can see right now is if we were to value Google stock at a 20 PE ratio, the stock would actually go down in a fairly significant way, down to around $86. And this is actually where I would really like buying the shares of Google, and where I've bought when it dropped down there before. 86 and kind of below 90 is where I think you start getting a margin of safety built into Google, where I am personally comfortable. And then if we actually start valuing Google at a 25 forward PE ratio, we can see that the stock would actually move up to $107.50, which would be an 8.18% move up. So those are the low expectations. Now let's get into some of the more interesting cases. So this is just if Google meets the average expectation. So that is that 19.68 PE ratio. So based off that, right now, if Google were to actually trade up to a 20 PE ratio, we would see a small move up that would only be a 1.64% move up to $101. But if Google moves up to a 25 forward PE ratio, we would actually see the stock move up almost 30% to $126.25. And if Google performs at a high level and we see it actually hit the high estimate for EPS, what we can do is, again, the same thing. So we have the current PE ratio of a 17.9 based off the high earnings of $5.55. And the price, if Google were to trade at a 20 PE ratio, we would actually see it go to $111, which would be almost a 12% move up. And then if it were to trade at a 25 forward PE ratio, we would actually see the stock move up almost 40% to $138.75. And when we look at Google's chart, we can see that all of those price targets are within the realm of possibility. So just a couple months ago, we saw Google trading around that $86 mark, which was the low EPS estimate for a year. If they were to, earn around $4.30 and then also only want to trade at a 20 forward PE ratio, we would see the stock move potentially down to this $86 mark. And then also that very high estimate, we could see that, around a year ago, the stock was trading at over $143. So, if Google gets back to growth and gets back to a slightly higher valuation, we could see the stock move up to, around $140. So I don't think any of those price targets are out of the realm of possibility. I think they all could be achieved over the next year. It just depends on, how Google performs and how the overall market is valuing these companies. So overall, I hope you enjoyed the video. Remember that these are all my opinions. I do own Alphabet, so I am biased to some sort of degree, and keep that in mind when you are looking at companies for your portfolio. Do your own research, make sure you're looking into these companies, make sure you understand the risks associated with these companies before you make any purchasing decisions. So overall, I hope you enjoyed the video. If you did, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.